All right, let's dive in. Today, we're talking about a pretty radical idea that could totally change how you get a loan or a mortgage or even just a credit card. We're going beyond the old FICO score to look at the rise of what's called lifestyle credit scoring. So let's just start with this one question. Think about it. We use our phones for literally everything, right? Connecting with friends, playing games, getting work done. But what if all that data, all those little daily habits on your phone, could actually unlock a loan, even if a traditional bank has already told you no? And this isn't some far-off sci-fi idea. This is happening right now. Now, to really get why this is such a game changer, we've got to look at the problem first. For millions, and I mean millions of people all over the world, the traditional financial system is like a room with a locked door, and they just don't have the key. And for like decades, that key has been just one thing: your FICO score. It's just a number based on a pretty narrow set of data, like your history of paying back loans and credit cards. It's the gatekeeper that decides everything: if you can get that mortgage, that car loan, or yeah, even just a simple credit card. This slide really shows you the problem, right? On one side, you have what the traditional banks see. It's a tiny snapshot: FICO scores, formal loan history, credit card use. But on the other side, that's what they miss, and it's huge. We're talking about a massive group of people called the underbanked. These are totally responsible people who just don't have that specific kind of credit history. Think about young people just starting out, or recent immigrants, or maybe an entrepreneur in a developing market. The old system, it just can't see them. So what if there was another way in, another key? Well, that's where financial technology, or Fintech, comes in, and it's totally changing the game. These companies are building a new way to measure something really fundamental: trust. And they're doing it with this idea called lifestyle credit scoring. Here's the key difference. Instead of looking at your past loan payments, this method looks at all this other data from your digital life, your everyday habits, to figure out if you're a good bet to pay back a loan. It's a completely different way to think about who you are financially. Okay, so how does this whole thing actually work? Let's peel back the curtain and go inside the alternative algorithm to see how your data becomes your new score. Yeah, this is the million-dollar question, isn't it? What kind of lifestyle data are we really talking about here? I promise you, it's probably not what you're thinking. It's a wild range of stuff. We're talking about social signals, patterns in the mobile games you play, how you use your apps in general. For instance, maybe you consistently pay your utility bills on time through an app. That's a huge positive signal of responsibility. The system then uses something called percentile scoring to see how your habits stack up against everyone else. So if you're in, say, the top 10% for on-time bill payments, that paints this picture of you as a reliable person, something a FICO score would just totally ignore. And look, this isn't just some concept on a whiteboard. It's happening out in the real world. Let's take a look at a company that's actually doing this right now: Tala. So check out how simple this is for someone who needs a loan. You just download the app and ask for a loan. Then you give the app permission to analyze your phone's data. And we're not talking about the contents of your texts, but the patterns and the metadata. From there, an algorithm crunches thousands of these little data points to create a custom credit score. And the result? You get a decision in minutes. Not days, not weeks, minutes. Okay, so let's zoom out. What does this all mean for the big picture? I mean, this is way bigger than just one person getting one loan. This has the potential to reshape the entire landscape of global finance. One of the sources for this explainer calls this economic democratization. And that's a really powerful phrase, right? It's all about giving people the tools to actually participate in the economy on their own terms. It's about leveling the playing field, opening up doors that have been slammed shut for generations. So why should you care about this? Well, first off, it creates real financial access for millions of people who were basically invisible to banks before. Second, that access opens up brand new pathways for economic opportunity, like starting a small business, paying for school, or just handling an emergency. And finally, and this is a big one, it fundamentally changes how we think about our own personal data. Our digital footprint actually becomes a financial asset. But all of this brings us to one last really important question. This technology has incredible promise, for sure, but it also comes with a pretty big catch. As we keep sharing more and more of our digital lives, who really benefits the most in the end? Is it the person finally getting access to credit, or is it the company that now holds all of that data? That's something we're all going to have to think about as this technology becomes a bigger part of our world.
Subscribe and like. You may share too. Top our next video to learn more.